Based on the historical data and forecast, Bitcoin exhibits a generally upward trend, though with some volatility. The support price consistently remains around $104,100, while the resistance fluctuates but has recently been near $109,300. The RSI values have been oscillating between 54.6 and 78.1, indicating periods of both oversold and overbought conditions. Considering the forecast, the price is expected to decrease slightly in the short term before potentially stabilizing. Therefore, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position when the RSI falls below 20, oversold, near the support price of $104,100, with an entry price of $104,400. The stop loss will be set just below the support at $103,800. The initial target price will be the recent resistance level of $109,300. If the price reaches this target, we will reevaluate. If the RSI reaches 80, overbought, while the price is near the upper Bollinger Band, we will take partial profits, say at $108,800, and move the stop loss to break even at $104,400, allowing the remaining position to run for further gains. This combined approach aims to capitalize on both short-term volatility and the overall upward trend. Based on the historical data and forecast, Ethereum demonstrates a generally upward trend, supported by consistently bouncing off the 2530 support level and recent resistance around 2680. The RSI consistently fluctuates above 60, indicating bullish momentum, and has recently approached overbought territory. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback is possible. Therefore, my strategy is a combined approach using RSI and Bollinger Bands to maximize potential returns while mitigating risk. My recommended strategy is to initiate a long position at $2,660. Given the RSI nearing overbought levels and the price touching the upper Bollinger Band, a tight stop loss is crucial, set at $2,620. The initial target price is $2,730, aligning with the forecast price and the upper Bollinger Band. If the price breaks through $2,730, consider moving the stop loss to the break-even point and setting a secondary target price of $2,710 to capitalize on further upward momentum. This approach balances the potential for high returns with prudent risk management, capitalizing on the prevailing bullish trend while accounting for potential volatility. Based on the historical data and forecast, XRP shows a slightly downward trend with the recent price hovering around $2.34. The RSI consistently remains below 80, indicating the asset is not overbought, but the recent values around 43.9 and 46.1 suggest it is approaching oversold territory. Considering the support price of $2.21 and the forecast prices consistently around $2.26 to $2.23, a cautious approach is warranted. The Bollinger Bands indicate potential volatility, with the price frequently touching the upper and lower bands. I recommend a contrarian strategy leveraging the potential for a bounce from the support level. My strategy is to enter a long position at $2.24, placing a stop-loss order at $2.21 to mitigate potential losses if the price continues to decline. The initial target price will be $2.33, aiming to capitalize on a potential rebound towards the middle of the Bollinger Bands. If the price reaches $2.33, I will move the stop loss to the entry price of $2.24 to secure profits and further protect the investment. A secondary target price of $2.42 can be considered if the price demonstrates sustained upward momentum, but this should be reassessed regularly based on evolving market conditions and technical indicators. Based on the historical data and forecast, BNB shows an overall uptrend with periods of consolidation. The RSI consistently fluctuates, indicating periods of neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering this, I propose a trend-following strategy with RSI and Bollinger Bands confirmation. We will enter a long position when the price touches the support level of $664 and the RSI is below 55. Set a stop-loss order at $654 to limit potential losses. The initial target price will be $686, aligning with the resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price approaches the bottom Bollinger Band around $634 and the RSI is below 50, we will enter a long position. The stop loss will be set at $624. The first target price will be the middle Bollinger Band, around $676. If the price continues to rise and approaches the upper Bollinger Band around $678, we'll adjust the target price to $688. This dynamic approach allows us to capitalize on the prevailing uptrend while mitigating risk through strategic stop-loss placements and target price adjustments based on volatility. Based on the historical data and forecast, Solana shows a slight downtrend in the recent forecast period, with prices predicted to range from $165 to $171. The RSI indicates periods of both overbought and oversold conditions, with a recent dip towards the oversold level of 49.5 on May 29, 2025. Considering the support price of $150 and the Bollinger Bands, which have been narrowing recently, suggesting potential volatility, I recommend a long position entry at $165. A stop loss should be placed at $163, just below the recent low and the lower Bollinger Band, to limit potential losses. The target price for this trade is $171, aligning with the forecast high and providing a reasonable profit margin. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 20, it signals an oversold condition, triggering a long entry at $167 with a stop loss at $165 and a target price of $171. Conversely, if the RSI exceeds 80, it indicates an overbought condition, suggesting a potential short entry at $175 with a stop loss at $177 and a target price of $173. Combining these signals with Bollinger Bands, if the price touches the lower band while RSI is below 20, a long entry at $165 with a stop loss at $163 and a target price of $171 is recommended. This blended approach seeks to maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a sideways trend with slight volatility. The support price is consistently at $0.182, and the resistance price is $0.245. The RSI fluctuates between 49.6 and 65.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been oscillating within the bands, suggesting continued sideways movement in the short term. Considering these factors, I recommend a short-term swing trading strategy utilizing the RSI and Bollinger Bands. My strategy involves entering long positions when the RSI dips below 50 and the price touches the lower Bollinger Band, and entering short positions when the RSI exceeds 70 and the price touches the upper Bollinger Band. Specifically, on June 5, 2025, the forecast price is $0.217, the RSI is predicted to be around 55, and the price is near the lower Bollinger Band. I would enter a long position at $0.217, with a stop loss at $0.182, the support level, and a target price of $0.245, the resistance level. If the RSI rises above 70 and the price reaches the upper Bollinger Band, I would enter a short position. This strategy aims to capitalize on the short-term price fluctuations within the established range, achieving high returns with calculated risks. Based on the historical data and forecast, Cardano shows a downtrend. The RSI consistently dips below 60, indicating a lack of strong bullish momentum. Furthermore, the forecast predicts a continued decline, with prices falling from 0.737 to 0.706 over the next week. Considering the support price of 0.621 and the decreasing trend, I recommend a short position. Entry price should be $0.737, with a stop loss set at $0.737 to protect against a sudden reversal. The initial target price is $0.718, aiming to capitalize on the predicted downward movement. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback. If the price touches the upper Bollinger Band at $0.737, we can enter a short position. If the price breaks through the upper band and reaches $0.737, we will set a stop loss at $0.737 and a target price of $0.718. This combined approach, leveraging both RSI and Bollinger Bands, offers a robust strategy for navigating the current market conditions. Based on the historical data and forecast, TRON shows a slight upward trend, consolidating between the $0.27 support and $0.275 resistance. The RSI fluctuates around 60 to 67, indicating neither extreme oversold nor overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation is ending, and volatility might increase. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the price touches the $0.27 support level. The entry price will be $0.27. To manage risk, the stop loss will be set just below the support at $0.268. The initial target price will be the resistance level at $0.275. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 30 near the $0.27 support, it confirms an oversold condition, strengthening the buy signal. If the price breaks above the upper Bollinger Band, it indicates a potential breakout and a move towards higher levels. In this case, we will adjust the target price to $0.276. The final portfolio will be a long position with an entry price of $0.27, a stop loss at $0.268, and a target price of $0.276, combining support/resistance levels with RSI and Bollinger Band confirmations for optimal risk-reward ratio. Based on the historical data and forecast, SUI has shown volatility with a recent downward trend. The RSI consistently dips below 60, indicating a lack of strong bullish momentum. The Bollinger Bands suggest that the price is currently near the lower band, which could signal a potential rebound. Considering the support price of $3.49 and the forecast prices hovering around $3.66 to $3.68, a strategy focused on short-term gains with tight stop-loss orders is recommended. We will implement a combined strategy leveraging RSI and Bollinger Bands for enhanced precision. The strategy involves entering a long position when the RSI falls below 45 and the price touches the lower Bollinger Band. For example, if the RSI drops to 45.4 and the price reaches $3.43, enter a long position at $3.43. Set a stop loss at $3.4 to mitigate potential losses if the price continues to decline. A target price of $3.7 would provide a reasonable profit margin, capitalizing on the anticipated rebound towards the forecast price range. This strategy will be applied daily, adjusting the entry and exit points based on the updated RSI and Bollinger Band readings, aiming for quick profits from short-term price fluctuations. Based on the historical data and forecast, Chainlink shows a slightly decreasing trend. The RSI fluctuates between 45.8 and 60.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been contracting recently, suggesting a period of consolidation. Given the forecast for the next week predicting a decrease to $14.6, I propose a short selling strategy. We will enter a short position at $15.3. The stop loss will be set at $17.5, just above the upper Bollinger Band, to protect against unexpected upward movements. The initial target price is $14.6, aligning with the forecast. To refine the strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will consider covering the short position early. Conversely, if the RSI rises above 80, suggesting an overbought condition, we will tighten the stop loss to $16.1. This dynamic approach combines trend analysis, technical indicators, and forecast data to maximize potential returns while managing risk effectively. The portfolio will prioritize the short-selling strategy with RSI adjustments, aiming for a high-return investment in the current market conditions. Based on the historical data and forecast, Zcash exhibits a clear uptrend, supported by consistently rising prices and a breach of the 54.8 resistance level. The RSI consistently above 50, reaching as high as 76.5, indicates strong buying momentum. The forecast for the next week predicts continued upward movement, with prices potentially reaching 56.3. Considering this, I recommend a long position. The entry price should be $52.3. To manage risk, set a stop loss at $51.9, just below the recent low. The initial target price should be $56.3, aligning with the forecast high. To refine the strategy, incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, but given the overall uptrend, we won't trigger a buy signal. However, if the price closes below the lower band and the RSI dips below 30, consider a temporary short position with a tight stop loss. For the primary long position, after reaching the $56.3 target, consider trailing the stop loss upwards to protect profits. This combined strategy, leveraging both RSI and Bollinger Bands within a broader uptrend, aims for high returns while mitigating risk. Based on the historical data and forecast, NEXO exhibits a sideways trend with price fluctuations between the support of $1.05 and the resistance of $1.27. The RSI fluctuates around 50 to 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, suggesting moderate volatility. Considering the forecast price of $1.26 for the next week, I propose a strategy focusing on short-term price movements within this range. We will implement a combined strategy using RSI and Bollinger Bands to maximize potential returns. My strategy is to buy NEXO when the RSI dips below 50 and the price touches the lower Bollinger Band, signaling a potential oversold condition. The entry price will be $1.24. The stop loss will be set at the support level of $1.05 to protect against significant downside risk. The target price will be $1.27, near the resistance level, aiming for a quick profit. This strategy combines the signals from both technical indicators, increasing the probability of a successful trade. The potential profit is $0.03 per share. Based on the historical data and forecast, Kaia shows a sideways trend with fluctuations around 0.114 to 0.119. The RSI consistently hovers around the 50 mark, indicating neither overbought nor oversold conditions. The Bollinger Bands have been relatively tight, suggesting low volatility. The forecast predicts a continuation of this sideways movement, with prices remaining near 0.114. Given this, I recommend a neutral strategy focusing on short-term price swings. My proposed strategy involves a series of short-term trades capitalizing on minor price fluctuations. We will implement a strategy based on the RSI and Bollinger Bands. When the price touches the bottom of the Bollinger Bands around 0.109, enter a long position at 0.110. Set a stop loss at 0.106 to protect against unexpected drops. The target price for this trade will be 0.117, near the resistance level. When the price touches the top of the Bollinger Bands around 0.13, enter a short position at 0.128. Set a stop loss at 0.132 to protect against unexpected rises. The target price for this trade will be 0.112. This strategy aims to generate small, consistent profits by exploiting short-term volatility within the established range. Based on the historical data and forecast, TRON shows a slight upward trend, consolidating between the $0.27 support and $0.275 resistance. The RSI fluctuates around 60 to 67, indicating neither extreme oversold nor overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation is ending, and volatility might increase. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the price touches the $0.27 support level. The entry price will be $0.27. To manage risk, the stop loss will be set just below the support at $0.268. The initial target price will be the resistance level at $0.275. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 30 near the $0.27 support, it confirms an oversold condition, strengthening the buy signal. If the price breaks above the upper Bollinger Band, it indicates a potential breakout and a move towards higher levels. In this case, we will adjust the target price to $0.276. The final portfolio will be a long position with an entry price of $0.27, a stop loss at $0.268, and a target price of $0.276, combining support/resistance levels with RSI and Bollinger Band confirmations for optimal risk-reward ratio. Based on the historical data and forecast, Eigenlayer exhibits a clear upward trend. The price has consistently bounced off the support price of $0.775 and approached the resistance price of $1.6. The forecast for the next week indicates continued upward momentum, with prices predicted to reach $1.74. The RSI values, generally above 50, confirm this bullish sentiment, although they haven't reached overbought levels consistently. Combining this with the Bollinger Bands, which have been expanding, suggests increasing volatility and potential for further price appreciation. Therefore, I recommend a long position strategy focused on capitalizing on this upward trend. My recommended strategy is to enter a long position at $1.54. Given the recent price action and the forecast, this entry point offers a favorable risk-reward ratio. Place a stop-loss order at $1.44, just below the recent low and the lower Bollinger Band, to limit potential losses. Set a target price of $1.74, aligning with the forecast high for the week. This strategy aims to capture a significant portion of the anticipated upward movement while effectively managing risk. This portfolio should provide high returns. Based on the historical data and forecast, PAX Gold shows a slight upward trend. The price has been fluctuating between a support of $3,270 and a resistance of $3,360. The RSI indicates that the asset is currently in a neutral range, not significantly oversold or overbought. The Bollinger Band suggests that the price is approaching the upper band, indicating a potential for a pullback. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $3,320 with a stop loss at $3,270, just below the established support level. The initial target price will be $3,360, the resistance level. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, signaling an oversold condition, we'll enter a long position at $3,280 with a stop loss at $3,250 and a target price of $3,340. Conversely, if the price touches the lower Bollinger Band, we'll enter a long position at $3,180 with a stop loss at $3,150 and a target price of $3,250. If the price reaches the upper Bollinger Band, we'll consider taking profits at $3,340. The portfolio will prioritize the moderately bullish strategy with a slight adjustment based on RSI and Bollinger Band signals for enhanced returns. Based on the historical data and forecast, Compound has been fluctuating within a range between $42.1 and $45.2. The RSI consistently stays between 46.3 and 56.1, indicating a neutral to slightly bullish trend. The Bollinger Bands show a contraction recently, suggesting potential volatility. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band. Specifically, enter a long position at $42.7. Place a stop-loss order at $42.1, just below the support price, to limit potential losses. Set a target price at $45.2, the resistance level, to secure profits. To refine this strategy, let's incorporate the forecast data. The forecast predicts prices hovering around $43.0 to $43.4. Given the recent contraction of the Bollinger Bands and the RSI readings, the price is likely to bounce back towards the $45.2 resistance. Therefore, maintain the long position initiated at $42.7. Keep the stop loss at $42.1. Adjust the target price slightly upwards to $45.9, reflecting the potential for a further price increase based on the overall trend. This portfolio combines the benefits of both RSI and Bollinger Bands, providing a robust strategy for achieving high returns while managing risk effectively. Based on the historical data and forecast, TRON shows an upward trend, supported by the consistently rising forecast prices and the recent RSI values pushing above 50. The support price of $3.19 provides a solid floor, while the resistance at $4.11 marks a potential ceiling. Considering the RSI, when it dips below 20, it signals an oversold condition, and when it rises above 80, it indicates an overbought state. The Bollinger Bands suggest that the price is likely to stay within a defined range, with the center band acting as a baseline. We will implement a combined strategy leveraging RSI and Bollinger Bands. Our strategy involves a long position with an entry price of $3.21 on May 30, 2025. The stop loss will be set just below the support price at $3.16, minimizing potential losses. The initial target price will be $3.51, aligning with the upper Bollinger Band and the forecast price on June 5, 2025. If the price reaches $3.51, we will move the stop loss to break even to protect profits. If the RSI reaches 80 or above, we will consider taking partial profits and adjusting the strategy accordingly. This approach combines trend analysis, momentum indicators, and volatility bands to maximize returns while managing risk. Based on the historical data and forecast, KAITO shows an upward trend, supported by consistently rising forecast prices and fluctuating within the resistance level of $2.3. The RSI values generally remain above 50, indicating a bullish momentum. The Bollinger Bands also suggest a potential upward movement as the price frequently touches the upper band. Therefore, I recommend a long position strategy. We will enter a long position at $2.22, coinciding with the beginning of the forecast period. A stop-loss order will be placed at $2.17, just below the support level, to mitigate potential losses if the price reverses. The target price is set at $2.52, aligning with the forecast peak and providing a substantial profit margin. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, we will consider entering a long position at the lowest point of the Bollinger Bands. Conversely, if the RSI exceeds 70 and the price touches the upper Bollinger Band, we will take profits. This dynamic approach allows us to capitalize on short-term fluctuations while maintaining the overall bullish outlook. The portfolio will prioritize the long position strategy with adjustments based on RSI and Bollinger Band signals, aiming for high returns while managing risk effectively. Based on the historical data and forecast, DeXe shows a slight upward trend. The RSI fluctuates between 38.4 and 59.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. The support price is consistently at $13.8, while the resistance is at $15.2. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 20 and the price touches the lower Bollinger Band. The entry price will be $11.8, coinciding with the lower Bollinger Band and a potentially oversold RSI. The stop loss will be set just below the support level at $13.7 to protect against a potential downturn. The initial target price will be the resistance level of $15.2, aiming for a significant gain. If the price reaches $15.2, we will move the stop loss to break even to secure profits and allow for further upside potential. The forecast data suggests a continued upward trajectory, supporting this long position strategy. This portfolio strategy is designed to capitalize on the upward momentum while mitigating risk through strategic stop loss placement.